Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll discuss now various ledger accounts to be prepared in costing records when records are maintained as per non-integrated system. Midland Engineering Company's cost ledger indicates the following opening balances as on 1st January 2014. General Ledger Adjustment Account, will use short form GLA. General Ledger Adjustment Account. This ledger is also called as Cost Ledger Adjustment Account, or it is called as Nominal Ledger Adjustment Account. This ledger is prepared to complete double entry under this system because we don't record cash account or personal account. So if we record transactions, we are recording only one side of transaction. So if double entry is not completed, we cannot prepare a ledger or trial balance. So to have that double entry effect, we have account called General Ledger Adjustment Account. We prepare this account. Here it shows opening balance credit 15,200. So we are going to open GLA, and to its credit we are going to write by balance brought down. Amount is 15,200. Store ledger control account 8,700. Store ledger is a stock, therefore it is having a debit balance. It's an asset. So here on debit side will be showing opening balance to balance brought down. Work in progress ledger control account. This is also asset having debit balance to balance brought down. Finished goods ledger control account, that is stock of finished goods, debit to balance brought down. These are the opening balances. Now from here we have transactions during the year. At the year end, the following information is obtained. Purchase for stores. Purchase for stores means purchase of materials. Now this will be recorded as purchase of stock, purchase of raw materials. So it will affect store ledger control account. So we are required to write this amount to stores on debit side. To complete the second effect, we will be putting this to GLA on credit side. Next, purchase for special jobs. Now purchase for special jobs means this will not be kept in stores. It will be directly transferred to the respective jobs. Therefore, this amount it will be recorded to the debit of work in progress, and we are going to credit GLA. Next we have direct wages 38,600. This will be recorded to the debit of wage control account, and it will be credited to GLA. Indirect factory wages, it will be considered as overheads because it is indirect factory wages. Factory overheads or production overheads. Administrative salaries, it will be recorded administration overheads control account. Selling and distribution salaries, selling overheads control debit. It will have second effect in GLA. Production expenses, these are factory overheads or production overheads. So factory overheads control debit, GLA credit. Administration expenses, administration overheads debit, GLA credit. Selling and distribution expenses, selling and distribution overheads control debit, GLA credit. Stores issued to production, here WIP will be debited and stores will be credited. Stores issued to maintenance, so these are not going to be used for production of output, but this is issued for maintenance, so it will be considered as factory overheads. And stores credit. Return to suppliers, stores credit, GLA debit. Production overheads absorbed by production, this is production overheads actually considered as per predetermined rate. This will be recorded in production overheads control account. We'll be finding the difference between actual overheads absorbed and actual overheads spent. The difference we are required to adjust. Administration overheads absorbed by finished goods. This will be recorded in administration overheads control account and finished goods control account. Selling and distribution overheads recovered on sales, this will be recorded in selling and overheads distribution overheads account. Product finished during the year, this is the total cost of product. Finished goods sold at cost, this is cost of sales. Sales they have given 1,50,000. You are required to record the entries in cost ledger for the year and prepare a trial balance. Let us open various accounts required to record these transactions. We have opened all necessary accounts. We'll start doing posting now. We have to record opening balances which are given as on 1st January 2014. General ledger adjustment account credit balance 15,200. In general ledger adjustment account, on credit side, here we will be writing By balance brought down 15,200. We have recorded this. Store ledger control account, debit balance opening 8,700. To balance brought down as on 1st January 2014, amount is 8,700. Next we have work in progress ledger control account, opening balance debit 4,300. Work in progress ledger control account as on 1st January 14, opening balance to balance brought down 4,300. Next we have finished goods ledger control account 2,200. Finished goods ledger control account 1st January 14 to balance brought down 2,200. At the year end, the following information is obtained. Purchase of stores 57,600. This store purchase, material purchase will be recorded at two places. First, stores account debit and general ledger adjustment account credit. Store ledger control account debit to general ledger adjustment account 57,600. Same thing will be recorded to the credit of GLA 57,600. Purchase for special jobs. This will not be kept in stores, it will be directly issued to special jobs. Amount is 1,700. This will be recorded to the debit of work in progress adjustment account and to the credit of GLA. Work in progress ledger account debit side to general ledger adjustment account. This is material issued to special jobs 1,700. Second effect of this, general ledger adjustment account credit side. By work in progress adjustment account 1,700. Direct wages 38,600. This will be debited to wage control account and credited to GLA. Wage control account debit side to general ledger adjustment account 38,600. This will have second effect in GLA credit side. By wage control account 38,600. Indirect factory wages 9,500. In wage control it will be recorded here to the debit. $9,500. This will be treated as production overheads. In GLA it will be there on credit side. By wage control 9,500. In production overheads control account it will be recorded here on debit side to wage control account 9,500. Administration salaries 9,700. This will be recorded in wage control account on debit side to general ledger adjustment account. Admin salary is 9,700. It will be put to then credit of wage control by administration overheads control account 9,700. In GLA it will be recorded on credit side by wage control 9,700. In administration overheads control account it will be recorded on debit side to wage control account 9,700. Selling and distribution salaries 4,300. In wage control it will be recorded to the debit to general ledger adjustment account. Selling and distribution salaries 4,300. To its credit then it will be recorded by selling and distribution control accounts 4,300. In GLA it will be recorded on credit side by wage control account 4,300. To the debit of selling and distribution overheads control account to wage control account 4,300. Production expenses, that is factory overheads 62,100. Production expenses are given 12,400. In production overheads control account it will be recorded to the debit side to GLA $12,400. This will have second effect in GLA on credit side by production overheads control account 12,400. Administration expenses 8,500. Administration overheads control account debit side to GLA 8,500. It will be credited to GLA by administration overheads control account 8,500. Selling and distribution expenses 5,400. Here on debit side it will be recorded to GLA 5,400. To the credit of GLA will be recording by selling and distribution overheads control account 5,400. Stores issued to production 54,700. To the debit of work in progress account will be recording here to stores ledger adjustment account 54,700. In stores ledger it will be recorded here on credit side by work in progress adjustment account 54,700. Okay, stores issued to maintenance 2,500. Here in store ledger, it will be recorded here on credit side. By production overheads control account, 2,500. In production overheads control account to the debit side, to stores ledger control account, 2,500. Return to suppliers, goods of 200. In stores ledger, it will be recorded on credit side by GLA 200. In GLA, it will be recorded on debit side to stores ledger adjustment account 200. Production overheads absorbed by production 24,500. This will be debited to work in progress. To production overheads control account 24,500. This will be credited to now production overheads control account. By work in progress adjustment account 24,500. Administration overheads absorbed by finished goods 15,200. This will be debited to finished goods control account. This will be credited to administration overheads control account. By finished goods control account 15,200. Selling and distribution overheads recovered on sales 9,600. This will be debited to cost of sales and credited to selling and distribution overheads control account. To selling and distribution overheads control account 9,600. This will be then credited to selling and distribution overheads control account. Here on credit side by cost of sales 9,600. Product finished during the year 1,17,700. This will be credited to work in progress and debited to finished goods account. This is debited to finished goods ledger control account. It will be credited to work in progress control account. Work in progress ledger account credit side by finished goods control account. $1,17,700. Finished goods sold at cost 1,32,300. This will be debited to cost of sales and credited to finished goods. By cost of sales control account 1,32,300. This will be now debited to cost of sales account. To finished goods control account 1,32,300. Next we have sales 1,50,000. This will be credited to costing profit and loss account. By sales, that is GLA, 1,50,000. This will be debited to GLA account. General ledger adjustment account debit side to sales 1,50,000. We have recorded all information which is given in the question. Now let us close all accounts. Let us understand how we have closed the accounts and given the effects. Stores ledger control account, total of debit minus total of credit. We are getting balancing figure here on credit side 8,900. By balance carried down. This is closing stock of stores. This will be recorded in trial balance. Wage control account, if we take total of debit and credit 62,100, it matches. That means there is no over or under absorption of wages. Work in progress ledger account, total of debit minus total of credit. We are getting balancing figure here 6,100 on credit side. By balance carried down. This is closing stock of work in progress. This will be recorded in trial balance. Administration overheads control account, total of debit, total of credit. We are getting balancing figure on credit side 3,000. This is transferred to overhead adjustment account. This is the problem of over recovery or under recovery. Here debit is showing 18,200, credit is showing 15,200 only. That means there is 3,000 under recovered. This will be debited to overhead adjustment account. Overhead adjustment account debit side to administration overheads control account 3,000. Selling and distribution overheads, total of debit minus total of credit. You are getting balancing figure on credit side. Again there is under recovery of 100 rupees. This will be debited to overhead adjustment account, to selling overheads control account 100 under absorbed. Finished goods ledger control account, total of debit minus total of credit. We are getting balancing figure 2,800 on credit side. This is closing stock of finished goods. This will be transferred to trial balance. Production overheads control account. If we match debit and credit, total of credit minus total of debit, we are getting balancing figure on debit side 100 rupees, indicating that there is over absorption of 100 rupees. This will be transferred to overhead adjustment account. Overhead adjustment account credit side by production overheads control account 100 rupees. Now overhead adjustment account is closed. We are getting balance of 3,000 on credit side. This will be transferred to costing profit and loss account. Cost of sales, total of debit, total of credit. We are getting balancing figure on credit side 1,41,900. This will be transferred to costing P&L. Now in costing P&L we have transferred cost of sales as well as overhead adjustment account. We have closed costing P&L. Credit 1,50,000, debit figures if we are deducted, we are getting profit 5,100. This will be transferred to GLA. Now in GLA we are having this amount here on credit side 5,100. Now we will be closing GLA, total of credit minus total of debit. We are getting balancing figure on debit side 17,800. This will be transferred to trial balance. Now we can close trial balance. Credit total is 17,800. We are required to take debit total. So trial balance is tallying, indicating that we have done all correct posting in ledger. In this question we have learned how to prepare various accounts under non-integrated system ledger kept of costing record. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.